what is going on in the real estate market today. We're seeing prices grow. We're seeing demand at an all-time high. And we're going to be talking about why that is, some of the numbers behind it, and some of the trends that are happening. Phenomenal episode with a very special guest. So let's get right to it. This is the Investor Mindset Podcast. What do you think the impact is for investors who are working on placing capital and buying properties in the midst of this type of environment? And what are you hearing from other people or yourself in the space?
Well, I was one of those people a few years ago really worried about some of the multifamily new investors who were not really calculating the possibility that rents could go down. So to me, that was really scary. Well, you know what? They won, because rents actually went up in most cases. And just like you, I was taking a more conservative approach, and there's not necessarily a downside to that. If somebody underwrote a deal only showing rents going up and it worked for them and everybody made money, good for them. Now, the opposite could have happened, especially a year ago. We had no idea. It was a really scary time, all these eviction moratoriums and so forth, that if it made sense in the protection of all involved to sell, and that's what you did, why not? You got money now, you can go back in the game. But I do believe, if you're underwriting today, it is still my belief that there is a ceiling at some point. At some point, people are going to max out on what they can afford. And that's what I think we're going to start seeing in housing. Rates have been low for a long time. And every time they go down, people can afford more of a house. When they go up, they afford less of a house. So, and if they can't afford any house, then they rent, generally speaking. And how much can they afford and rent? It's all going to be a matter of supply and demand. If there's not enough rentals out there and the rents keep going up, they're going to be forced to spend more on housing. If there are more properties that come online and more rentals available, then rents will go down. Of course, we saw that in big cities as more and more people left, but they're coming back now. The cool factor is back, right? Restaurants are reopened, shows are open. The boomerang is intense. It's more intense than anyone maybe expected. I think that the TSA is busier than it's ever been. Like, people maybe haven't seen their family for a year. They haven't seen loved ones. They haven't traveled. So they're going crazy. They're out there doing stuff. So now people are moving back to the cities, and there's a little bit of a shift there happening too. So bottom line, supply, demand, lots of household formation, lots of young people finding jobs. There's 9 million job openings right now? 9 million job openings. And a really interesting statistic right now is this quits rate, which is people saying, I'm going to quit this job and get a better job, because there's 9 million jobs out there. So in that process, the only reason you would do that is if you got a better job, like better location, better, whatever. When there's 9 million jobs available, usually the employer has more incentives. So we're seeing that kind of shift happening too, where people didn't do stuff for a year, so they saved. They have the savings rate has gone up. Their balance sheets are looking better, and they're ready to go. They're revved up and ready to go. So I expect more of a boom over the next year and maybe the year after that.
So when someone is looking and they're making investments, but they're looking at like a 5 or 7 year time horizon, how does what's happening today impact that? Like when they're buying today and things are hot and we're seeing values go up, how are you thinking? You're also a conservative investor. You like to make sure you're preserving capital because you've experienced what it's like to lose equity or to, lose your own capital. How are you looking at that? How should other investors look at that depending on, what their risk profile is?
Yeah, it's a great question because, we do think that this boomerang will continue for a year. I know at Housing Wire, their chief economist has said that we'll have all the jobs back by 2022, but possibly sooner with all these job openings. But what after that? What happens when the Federal Reserve decides to raise interest rates to kind of slow down the boom? That generally slows down housing as well, or at least the home price growth when interest rates go up. And that most likely will happen a little bit. It will tick up this year and it will tick up a bit next year. But what will happen in 3 years from now, 4 years from now? What will interest rates be at? I've heard all kinds of opinions on that. Some people I really trust believe it's impossible for rates to go up much more because there's just so much debt that the government itself could not afford interest rates to go up and make that debt payment. So a lot of what I have heard, and I'm not an expert on interest rates or the Federal Reserve, is that they're probably going to stay low for a while. So then what happens, instead of raising rates to slow down the economy, prices will just rise until they can't rise anymore, where people just simply can't afford to pay more. And that's where it starts to just level out, not any kind of crash. I don't personally see a housing crash in the future, simply because of the things we talked about earlier. The people who have owned homes for the last 12 years, 12 years, have been highly qualified, have put down payments, have tons of equity, low fixed rate mortgages. Many have not cashed out that equity. They're sitting on a lot of equity. They're not, where's the problem here? Like, even with these forbearances, we have 2 million people still in forbearance who haven't paid their mortgage. Well, it turns out they are in better shape than they were before the pandemic because they haven't made mortgage payments. They've been saving, their savings rates improved, and they're most likely going to just have a loan modification. So they kind of got a year and a half not paying the mortgage, and it just goes on the end of the loan. So they have savings. People aren't going to suddenly go, what am I going to do? I'm going to just sit here and watch this wave from a distance. I'm just going to stand here and not move with this wave miles away coming at me. I mean, that's what it's like. You're just going to put your house on the market. You're not going to say, oh no, I can't make my payment. I'm just going to give all this equity to the bank. No, people are going to put it on the market, get a real estate agent, and sell it because there's tremendous demand, and they're going to cash in and take their equity and move on. So if they're underwater or don't have any equity, maybe then they walk away, but it would be such a small percentage of people in that situation where they don't have to destroy their credit. They just sell their house.
Today's episode is sponsored by Von Finch Capital. If you're interested in investing alongside me in the same type of real estate opportunities that I personally invest in, then head over to Von Finch Capital and join their private investor network. You can do so at vonfinch.com/invest. Join me on that next deal, and I look forward to seeing you on the inside. Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.